Okay, let me cut in here real quick and give you the conclusion to the video because the video was really long and I didn't intend for it to be that long. If you want to watch it though, watch it because I explain how I came up with the strategy. But here's the strategy anyway. So the strategy is a dollar cost average strategy. Each of these are individual sort of sections. We've got DCA Buy, DCA Pro, DCA Max, and DCA Ultra. Let me give you an example of how it works. So imagine you have $100 that you want to put into Bitcoin, okay? 20% of that $100 or $20 will start at this point. And the first section is when it's below 71K, okay? What about DCA Pro? That's where you want to put in 40. Okay, you put in 40 when June hits. Okay, when June hits, and we're already in June, so you can start already. At DCA Max, you might want to put in $60. Remember, this is only an example. You can do this as early as mid-August. What about DCA Ultra? That's $80 that you want to put in. You can do this between September and December. Also keep in mind these key target dates. So you haven't used all of the $100 in these areas. All of the remaining dollars you save up and you put it in USDT. And if any of these key price targets come in, that's when you can put that money in. I explain all of this in my video, so feel free to watch it all. Good luck. Yo, welcome to another Show Me the Charts video. It's been a while, people. Let's cut straight to the chase. I'm gonna do a little video here and I'm gonna plot out my charts on a blank Bitcoin chart, right? I'm gonna use the Coinbase chart here. I'm not gonna be long. I'm just gonna explain and demonstrate a couple of tools, strategies that I use, what I'm doing, and I'm gonna go pretty much all over the place. So I'm not even gonna try and be structured. I'm just gonna get into it right now. Yeah, cool. So I'm on a Bitcoin chart. Bitcoin on the monthly. I'm going to zoom right out here, macro. I'm using the Coinbase chart, right? Quite a bit of volume. Isn't the most amount of time. It only goes back to like 2015, but it's enough, right? It's enough. Okay. These lines that I have here are just the swings that the price action does. And it's based off of the WD-GAN rules. I'm going to keep them in there. I'm keeping that in there. The RSI is there. Ignore that for the moment. All right. I'm just going to showcase one tool that traders have available to them that offer the highest probability of a meaningful price reaction among all indicators, right? And that's just simply the macro horizontal support and resistance, all right? Macro. So we're talking mainly the monthly. You can use it weekly. I prefer bi-weekly, but the monthly is really useful. Let me try and prove it to you, yeah? Here we go. Again, Bitcoin monthly chart. These are the closes, all right? Where this big part of the thick candle is, that's the close, all right? Professionals control the close of the price. And that price back in December 2017 was 13,800. So just think about what you were doing back then, okay? On the end of the month, it closed at 13,800, but the price the wick went to 19,900. So quite a big price difference, yeah? Okay, I'm just gonna mark that out. I'm gonna go up to the top left here, use this horizontal marker here, and I'm gonna plot that on the chart right there. And I'm gonna make it nice and thick, make it 4 pixels. Let's give ourselves a bit more room, and I'm just gonna plot that there, yeah? What I'm also gonna do, I'm gonna plot out the top of the wick on this one, because this is December. This is December, all right? December closed at 13,800. It opened again, okay, in January, and it went to 17,200. All right, I've got the magnet turned on as well, right? So it's quite sticky. You'll go to these edges automatically to make sure it's knob on, and I'm going to place that there. So all I've done is add some horizontal lines to the monthly candle body and the wicks. Okay, these 3 ones here. Remember, this part of the chart wasn't here. All right, that part of the chart wasn't there. We only had this information right here that we can see. December and January 2018. What do we see when we scroll to the right? When time finally reveals itself, it acts as resistance in June 2019. Big difference from January 2018 to June 2019, okay? Time later, all right? Even later then. In 2020, October 2020, look where the candle body is, where the close is. Look where the open is. Look where the candle closes here and look where the open is. we can see that it does have, price action does have some sort of reaction. Here it's resistance, here it's somewhat acted as support. I'm sure if I was to zoom in on the daily or the weekly, you'll see a lot more bounces in it actually being respected. So we want to plot those on our chart, right? And that's what we're going to do. All right. Do we see years later it act as support or that there's some type of reaction? Yes. Look at this. I remember this. This drop was harsh. This was the bull market of 2021. Okay, going into the bear market. Well, actually, this is the first drop, right? Is that the first drop? Yeah, oh no, that's the second drop. No worries. That's the second drop. This was the first drop, and then this drop was the bear market. What did it do? It came right back to those areas. Right back to those areas. Look, that's where we bounced off of. That's where we bounced 2022. Remember, this was created back here in 2018, and then 2022, 4 years later, it's still offered an area of some type of reaction. And in this case, it's support. Went up, came back down, we lost it, FTX happened, and we still found support in an area right here. All right, don't get me wrong, we had a month below it, we had 1 month below it, but the following month closed back above. Cool, so we're gonna use these and we're gonna plot these on a chart. Cool, let's keep it moving. Okay, so I've added a couple of more of the horizontal support and resistance lines. Now I'm definitely grabbing the macro ones, and I'm grabbing ones that have multiple touches, right? So it's important to do that. Don't just grab any one, grab ones that have been used multiple times. For example, this one here in 2022 in that bear market right here, you can see it's been touched here, acted as resistance right here. It's acted as resistance right here. Okay, and it's acted as support right here on the macro. So I'm plotting that out. All right, this line's evident. This one here, it acted as resistance here on the close, an important one, and it's offered support all the way through here. Okay, it's also offered support here as well. So this is quite a crucial one. This line here is quite a crucial one, even the most recent one. So the more touches and the most recent it is, pay attention to it. Pay attention to it. So in those cases, what you might want to do might be useful. Give that one a different color. All right, make it stand out. This one is a very big area of confluence here. It's got the highest probability of a meaningful price reaction. All right, this is one of the most simple tools that we have. All right, that and patience. All right, so those are all those other ones marked off. I could go through the other ones, but like I'm not going to waste my time. You can see the acting as resistance here. You can see it's acted as support here. With this one, resistance here. But this one's quite strong, and we're using it as support right now. And based off of this, you can actually look at it and say, hey, should I be actually dollar cost averaging right now? Like, is it a good time to buy? And I'll tell you what I think at the end, but it's pretty much self-explanatory right here. You know, the bet. Pretty much the bet. Let's move on. So I plotted out all of those horizontal support and resistance levels here, and I've grouped them together, and it just makes it easier for me to show and hide them all, right? What we was doing is essentially we are establishing a structure, all right? That's actually what we're doing. This is a structure, just the same way as if I was to do this here. Okay, I'm going to zoom out a little bit. Here is when we broke this first high. All right, remember that bear market that we just came out of in 2021 to 2022? All right, 2021 to 2022. There's the lower high, but these are lower highs. Those are lower lows. That's the structure. That's the structure. This one here is when we first broke it. That's the higher high. There's the higher low. Breakout. Okay, higher high, higher low. Higher high, higher low. Higher high, higher low. Breaks it in November 2025, breaks the low, but we don't know if it's going to come up and break the higher high yet, but there's a warning sign right here, and then there's the lower high, lower low. There's the structure. We're in a downtrend. Okay, we're establishing the structure, so that's really important. So yeah, that's all about structure. We also don't want to forget about the other two, which is strength and trend, right? Strength, structure, and trend. It's hard to say that, isn't it? There's other ways of establishing the structure of something as well. You can use Elliott wave theory. You can use 50% retracement tools. Wyckoff schematics. Some of the stuff I might go through in this video, some I won't, because some of them I just don't use. I don't really use Elliott wave theory, but I do use the 50% retracement, and I do use Wyckoff schematics. So for example, Fib retracement tool, got it right here. Here's the swings, nice and simple. Bam. I like to pay attention to the 50%, and I like the golden ratio here. That's why I've got two little signs here, the 0.618 and the 0.65. All right, but the 50% is really important. You can see it already being respected. Just off of this swing right here. This swing right here, you can see that it is being respected here as support, and it's being respected here as resistance, just off the fly. And we can see the fact that because it's been rejected off the 50%, it's in a weaker position, and we have got a downtrend. It's breaking certain levels so that we are in a downtrend. Let me actually put this on. Okay, I'm going to put this on. This is on my sort of timeline. Wait, sorry. This is the fib retracement tool like I like to have it. But I'm going to apply some of the defaults. That's what it is as default. Let's move it across. Okay, yep, you still got the confluence there because you've got the 382 right here, you got the 236 there, 786 right here, and it's still being respected. And you know how you use the retracement tool is as the market's moving, you move the fib retracement tool up as well. Okay, so remember, you don't always have all of that information on the right hand side over there. So you use it as validations, and that's what you want to do. It's respected. So it helps with establishing structure. All right, cool. So yeah, I spoke about structure. When we're talking about things like strength, we want to use things like the RSI, relative strength index, and strength measures the energy and momentum behind the price action. And it helps us to determine if something's being exhausted or not, right? So you can see here, this indicator that I've got, RSI indicator, it automatically notifies me if there's bearish RSI divergence. The RSI has lower highs while the price action has higher highs, and that's just a divergence there. And you can see in every sort of bull market that's transitioning to a bear market that we get these RSI divergences. It seems to come through. You can see it happened all the way through here. All right, this high here, this high here, this high here, which equates to this high here and that high there. It's a divergence, so it's somewhat letting us know. And it's hard to act on these things at the time, right? With all the news and the money that you're making, it's hard. I find it really difficult to sell in bull markets. That's why part of the reason why I don't like bull markets. I actually prefer the bear. I'm quite a patient person, so I quite like accumulating. But that's one of the things that we can use to help identify strength. Okay, so we've talking about structure, we've spoken a bit about strength, and I did touch on trend as well in terms of the fib retracement, because you can use that to determine trend as well. The moment it sort of breaks a 50%, for example, we're breaking 50% levels, we've got a 50% level here, we're sort of breaking structure. We are somewhat breaking structure. We come down here, let's look at the example I used before. Going to move it across here. Let's have a look at this. So you can see here's the 50%. Okay, there's the 50%. We didn't have any monthly closes below the 50%. We didn't have any. We didn't have a 50% break of structure here. Okay, so the trend is still up. Many people will use moving averages. I prefer to use the fibs, but you can use moving averages as well. 50, 100, 200, you pick. But this helps to identify which trend we're going in. All right. Breaks a trend, make a new friend, right? Trend is your friend until the end. When the trend breaks, make a new friend. So that's it. Strength, structure, and trend. Some of the important things and some of the important tools. And that's really simple to use. You don't need no premium account for this, for things like this on TradingView. But having a premium account to you're able to set alerts and add additional indicators, that can be really useful. So have a think about that. But that's how you set up the chart. Now I'm going to kind of go a bit further into detail about like what I think's happening now, what I'm looking at what my strategy has been, right? Let's do it. Okay, this chart that I've got is a bit of a handful. All right, I've moved to a different chart. This is something that I've been using since the bull market, really, and transitioning into the bear market. What do I want you to pay attention to here? We are in Bitcoin. We're on the monthly. I'm using the Bitstamp trading view versus the Coinbase one I used earlier. Why am I using Bitstamp? Because the data goes further back than Coinbase. All right. Reds here are bear markets, greens are the bull markets, and I've mapped that out from Bitcoin's history. We don't have the BLX chart anymore, so I'm using the Bitcoin Bitstamp version. Let's undo all of that. All right, you've probably heard about this at length the amount of time that's spent in a bear market. I'm on the monthly, 14 bars, 12 bars, 12 bars. All right, those are the 3 bear markets that we have. And all I've done is I've plotted out, well, where would we be if we went 365 days from the top? And where would we be if we went the longest amount of time, the 426 days? All right, and I've just mapped those out. Okay, what I've done here, that's where this part comes in. These 2 red icons right here. All right, 365 days or 12 bars on the monthly and 14 bars, right? Where did they come to? Where did they come to? Well, I've got them right here. Thursday, the 1st of October and December 1st. Remember, we're on a monthly. So this isn't going down to the daily or the monthly. Macro is a bit more accurate than more micro timelines, time frames. So we're going to focus on the monthly right now. So just worry about the 12 to 14 bars. So basically we're saying October and December. So keep that in your mind. Now, when I was previously talking about strength, structure, and trend, I didn't talk about time, but time's important. I like to follow some of the strategies and teachings of W.D. Gann and Wyckoff. I think they're great investors and traders and researchers. And if we were following time, okay, if it's true what W.D. Gann spoke about and time is more important than price, then you probably would have stayed on the right side of the market. You would have exited on 34 bars of the bull market. The bull market here, 34 bars. From 2022 to 2025, it was 35 bars. Just like the previous year, 35 bars. Just like the previous bull market. And the bull market before that, 35 bars. You would have stayed on time. Every trend usually breaks, right? I'm not saying that that's what's going to happen when we're going forward, but it's a good guide. It's a good guide. It would have kept you out of the trade, and it's what kept me on the right side of the trade. When we got to this area of 35 bars, I was looking at exiting my position. Now, I had to wait, and it was quite difficult for me to do so, but I did exit and take a short. I didn't exit all of my Bitcoin. I'm not gonna tell you guys that I caught the top or anything like that. I didn't, but I entered my short at 121k. At the time, I was mad that it hit 121k because I was actually supposed to get out at 125. If I was to zoom in here, I had an order for 125 and it didn't get there. We broke a trend line that I had. Okay, we broke a trend line and we came up to retest, and I had my orders on that trend line and we didn't hit it. We missed it by a small amount, so I had to get in again on another pullback, but I got in. And obviously you might think now it's small, right? 121 versus 125 to where we are today, which is 65.6. That's an excellent short. But essentially what I'm trying to say is keeping track of time is very important, and it's arguably more important than analyzing the strength, structure, and trend. It could be, I could hear the argument for it. It's something that somebody should plot. Okay, and there's different ways that you can use time as well, right? Seasonalities. I know a lot of people talk about the seasonality of Bitcoin. Yeah, so the seasonals right here. They could give us a good indication as well. For example, I mean, I've done the stats on this. June, August, and September are generally great dates for a drawdown in bear markets. If you look at August and September, you can see the end result, like 3 up, 6 down. But if you account for bear market was 2022. That's August. 2018. It's those June, August, and September are really good drawdown dates. So that's to take into account the seasonals. Okay, so I'm going back to my chart, knowing all that sort of information. I've put it back on my blank chart. I've put in the dates where the bear market has ended, based on previous information, which was October and December. I've put those in purple right here. So let's continue to map out this blank chart that I've got, right? Remember, I also mentioned the bearish RSI divergence. Those are in there as well. The structure is still there. If I go to my object tree, those should still be there as well. So if I turn on that line, we got our lines in here and our chart is coming along fine. Let's move on from that. Okay, so let's forward to where we are kind of like today in this bear market. The bear market, which happened in October 2025, the one I've been shorting since 121k, yeah? And no, it's a lot of information here. Hang on with me, try and bear with me, and I'm going to plot this on the blank chart so it looks a bit easier for you to digest. What do we have here? And what has my strategy been? My strategy has been you have only, or me, I have only been allowed to dollar cost average only if we go below the 50%. Okay, we did so for a short amount of time here. Okay, for these 3 months here, you're only allowed to DCA weekly, and I DCA weekly once we're below 50% and or we get to June. You'll notice here we have a low here and then we have a lower low in June. Once again, June being a bearish month. Okay, we looked at seasonals. We did look at seasons. Have a look at also again at Gantt's key dates as well. That's really interesting to have a look at. So once we've gone below the 50%, I'm allowed to DCA a certain amount. If we're below the 50% and we're in June, I increase my DCA amount. Okay, I increase my DCA amount. So that's why those are in there at the moment. Okay, I've also got a prediction for the TLL here. Okay, ignore that for the moment. This will move as time goes on because I don't know if this is the second low before the lowest low. I don't know that yet. This one could be the drop we had here in February could be, and this could be the low. All right, it could be, but this is the part where I monitor. All right, that's the part that I monitor. I've got this red box here of where potentially if we was to have a black swan, I think a black swan would be needed for price action to get here, and that's between 40,800 and 28,000 that I want to put in the most amount of money. I'm willing to trade that. All of my funds, everything, all the money I can get hold of, I'll be entering Bitcoin on this trade. Now I do have an invalidation. If we was to break and close a monthly candle below the previous bear to bull low, which is about 15,000, if we was to close a monthly candle there, I'm out. Okay, I'm willing to take that loss. I'm willing to take that loss of 50, 60, 80%. I'm willing to take that loss, but I do have an invalidation point. So I've marked that out there, and I've marked that there for a few reasons. I've also got a trend line here, a bear market trend line, which is hitting this area here, and it's at the top here as well. And I'm going to make it cleaner for you all to see in a bit on the blank one and map that out for everybody. So I've got the second low before the lowest low, and to let you know, I had this in from a while back. This was well before June came in. Trust me, this chart has been in play for a very long time. I was holding on to this potentially being the low before the lowest low, and it's interesting that it's happened. All right, and we're going to revisit this chart. So we're going to go back to our blank chart now. So back over to our blank chart. One of the things that I did previously is I put a horizontal trend line. This was when we was going through the bear market here from 2021 to 2022. And I remember this very vividly. I had the trend line coming down like this. This was when I believed a lot more in diagonal trend lines. I don't use it as much anymore. Okay, I don't use it as much anymore, but it did help me. Okay, I remember buying this low. But this breakout and then this retest, I bought some Bitcoin here. And specifically with this low, this was the FTX crash. All right, everybody who I knew who was in crypto, who had followed me throughout the journey going up here, had left by this stage. By the time this breakdown here happened, they were all out. Okay, so I had to survive months, years by myself without hearing from anybody at this stage. April 2022 all the way to where were we, until we got this breakout here, all the way to 2023. October 2023 is when I started hearing from people again. But this breakout here, my point being is that this breakout here and then this retest was very important for me because it was one of the biggest bearish things to happen in crypto. FTX crashed, lost people's funds, but the low wasn't as drastic as this one here. This low, you can see this swing here was much larger than this one, and it just shows exhaustion. That combined with bullish RSI divergence, that combined with an overbalance in time and price, the time to the price to the downside was much shorter than this one here, and it was one of the most bearish occasions to happen in crypto, and we just bounced off of this trend line. And unfortunately I didn't buy a huge amount. I wish I did. I didn't have the conviction because everyone was still saying that we'd go to 10k, but we had that in. The point being is that I'm going to put this trend line into this chart as well. So let me update the chart. Okay, so using some of the simple tools and strategies that I've explained, this is what our chart eventually pretty much looks like. I know it looks a bit confusing. Let's start with this, right? Currently our drawdown to where we are low, okay, that low in June, was it June? Or the low here, maybe it went a bit lower in July, it amounts to 54%. Okay, it's been less of a drawdown, like I mentioned before, in each bear market. This was 77, the other one was like 80 odd percent, 77%. So just based off of the price, is this enough? Could be, right? 54%, 77%, 80 odd percent, 90 odd percent before. Perhaps it is, all right? But at the end of the day, Bitcoin's got a bit of work to do. This is where we are at the moment, right? Bitcoin's got a bit of work to do. What we have, and I'm going to zoom in a little bit. I'm going to go into the weekly. What we have here is we have that down diagonal trend line. Let me plot that out in a different color, in red, and let's give it a dash sign. Okay, we have this down sloping trend line here, and we also have some resistance here. It's not a monthly swing, or is it a monthly swing? Oh, it is a monthly. Oh, right, there's a monthly close right here. There's a monthly close right here. Okay, so monthly close right here. Horizontal line, you can see it here. It was also resistance right here as well, and actually a little bit of support right here. So I've actually missed one of these plots right here, and I'm gonna color that. Let's put that in a blue right there. Okay, it's actually a terrible color. It doesn't show up that great, but what Bitcoin's gonna need to do, all right, that's monthly. So I'm gonna zoom in a little bit at the weekly. You can see we've got quite a bit of resistance up here. Bitcoin's going to need to close the month of July, okay, for it to start with some of the bullishness. It's going to need to close the month above 67K. It needs to close and hold. And I'd like to see 2 months hold, right? So is there any confirmed change of structure? No, not on the macro. No. Now it does start on the micro before it transitions into the macro, right? So we need to zoom in a little bit, all right? We do need to zoom in a little bit, but essentially have a look, zoom out on the monthly, and you can say to yourself, here's the structure, all right? Here's our dates, the key dates, all right? We've got October and December that lows typically form, the shortest and the latest. Maybe you give a week or two as well, right? So it comes actually into September. All right, and we know September is usually quite a bearish month. So maybe you say September, maybe you give some a bit forward, so maybe January as well. All right. Has enough time passed? Not necessarily, not traditionally how it's been, how bear markets have transpired previously, you know, in terms of time. It hasn't gone past. Have we confirmed any break of structure? No, we haven't broken past that. What about price action? 54%. Well, we could go further. We could go further down. But are we below the 50%? Yeah? Are we below the 50%? I'm going to clear up some of these lines so that you're able to see it a little bit better. Let's go to object tree. Let's do it on the fly here. Oh, it's up here already. Let's get rid of these horizontals here. Let's clean up the chart a little bit. All right, I'll keep that one on. We're on the monthly. Let's back out the fibs. You know, I like to back out my fibs on, man. All the way to bear market low and to the high, the bull market high. Okay, 50% comes here at 70K. So that there's actually a lot of resistance here. So even though I said Bitcoin needs to go above the monthly on 67K, it still has to contend with this 70,800. Okay, it still has to contend with this resistance here. You know, this candle here. This massive 50%. 50% are really important. Bitcoin's got a lot of work to do to prove to us, and it hasn't gone past in time yet. So that's just to say that you've got time to accumulate. You've got time to DCA. And if you're following the way I DCA, you're already starting. You know, we are past June and we are below the 50%. So should you be DCAing? Yes. And if you're doing it the way I do it, you're on level 2. We're below the 50% and we are past June. So you want to be accumulating like a pyramid, less up here, more down here. Okay, remember I did outline one of the areas that was like a price area and time that I would be putting a lot of money into Bitcoin if we were to get down there. And if I go back to the chart, that was down here. Okay, that was the price target of 41 point, let's say 41k, all the way down to 28. Will we get there? It's unlikely, but I'm keeping some money just in case we do. We have to get there in this time period between September and November. All right, maybe I didn't make that one very clear, but if we get to that price and time target in that area, I'm buying a shit ton of Bitcoin, pardon my language. Yeah, so that's the strategy, and that's what I'm going to be doing going forward. Afterwards, I guess maybe in later videos, I will show you how I'm tracking the Wyckoff accumulation. I think we could be in an accumulation phase. I posted it up on my Twitter. That we could be in phase B. I've marked this off. I'll go into it in a bit more detail next time. There's phase B. I think we've come out of phase A with a preliminary support, selling climax. This is me having a look at volume as well, secondary tests, and this is all part of phase B. Okay, let's look at that here. Let's kind of zoom in a little bit and give you a lot of taster. Phase B. We could be in phase B here. All right. Right here, this is the phase. All right, it doesn't need to look exactly the same. It's the things that happen in between with volume. Okay, secondary test. There's usually multiple secondary tests. We're testing the supply. Big buyers, big professionals, they're trying to get the price lower and accumulate on lows. All right, but they're trying to test to see where the supply is. If the price isn't ready to move down, then we will move down and it won't necessarily be a spring. And this isn't necessarily the selling climax. Perhaps this is the secondary climax and we're still in phase A. Okay, a lot to get through. I've done a long video enough, but just know if we are in phase B and there are signs of it being a phase B, okay, it serves the function of building a cause. Okay, there's going to be multiple tests. It's going to be messy. But if we could expect a spring where it takes out that low. In this case, it would take out the 58k low. So let's monitor that, see how it goes. Long video. If you've got any questions, let me know. But then again, as I always say, what do I know? Have a good day.